Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of Likefolio. Welcome back to the show, Landon.
Hey, Tom. Good to see you. Happy Monday.
Happy Monday to you, too. On holdings, snapping back about 5% so far this month. It had a rough stretch there from about January through the end of April. I mean, what kind of data are you guys seeing on this one? Because it wasn't just on holdings. It was every name within the athletic apparel space that was getting hurt. What kind of data do you guys have on this one?
Yeah, they were definitely hurt. I mean, a year ago, this was a $30 stock, got up to 64, back down to 34 like you're talking about. Now we're kind of in the middle, on our way up, I guess, but around 51. So, if you're looking as an investor, you're halfway between that high and low, and you're not sure if we're recovering or we're part of this bear market, like you mentioned. So, tough spot to be. But starting with their last quarter, I mean, this was one of the best, I think the best quarter that they've ever reported. Revenue up 36% to $690 million, gross margins at 62%. Half of their revenue is direct to consumer, and that was up 43% last quarter. They're even getting into apparel that's contributing another 100-something million. So they're showing that it's not just shoes. Their brand affinity can actually cross categories. They're guiding for very strong year-over-year growth, I think 27%. And everything that we've got is showing that they are the leader when it comes to growth. Like, obviously, they're not as big as Nike. They're 1/17th the size when it comes to market share, but their growth is just the number one company when it comes to shoes. So when you look at, for example, web data, which is obviously very strong to them, again, about half of their sales are direct to consumer. Their web data is very strong. If you look at the 90-day moving average was plus 20% year over year, but the 30-day moving average is plus 34. So what does that mean? That tells us that they were doing really well if you look at the last 3 months, but if you zoom in even tighter and just look at the last 30 days, that almost doubles. And so things are accelerating to the upside for them right now. And obviously, if you're going to own one of these shoe companies, you're going to want the one at the top. Hoka's a brand that we've always talked about doing really well. That's Deckers Outdoors number 2 there. But OnCloud is beating them as well. And of course, Nike, the one that just basically dropped the ball over the last couple of years, just invited all the competition to come and take a piece of the pie, and everybody's willing to accept that invitation. That's what's happening right now. I think a lot of that has to do with Nike kind of losing their way when it comes to performance. I mean, they were big, they were made by performance, and they moved into looks and, style, and that goes a long way, obviously, but I think that they left a hole, and OnCloud filled that hole when it comes to the running segment. That was Nike's original roots, but now OnCloud's filled the performance side of things with running. Now they're starting to get into tennis with the partnership with Federer. And so, they are really taking over the performance category where you want comfort, you want the ability to perform your athletic endeavor better because of these shoes, and that's what they're going after. Extremely strong consumer sentiment, and at just 2% of market share, they have a ton of room to grow. So I think that's what investors are looking for. They're looking for that big growth, and they see, they've got Nike in their sights. They're chipping away at it. It's obviously, David versus Goliath. They're nowhere near, but every little bit helps, and they're very clearly showing that they can chip away at that lead. And so the data that we've got is actually pretty strong here, Likefolio is continuing to be bullish on OnCloud.
Landon, this shoe is incredibly popular. You're right. They have a small percentage of the overall market, but if you go out into the world, if someone's not wearing Nike or Adidas, a lot of them are wearing Hoka or On holding. So, I mean, they are getting incredibly popular. But the thing is, they're going to benefit from the tariffs coming off. That was a risk to them, right? Their growth. They have to keep growing at a good pace because the stock is not cheap. Even though, Tom mentioned it went from 64 to 34 quickly. Lost half its value. That's the risk on a company that needs to keep growing to hold that value. Are you guys seeing any weakness or breakdown in the data that says they're not growing at the same pace they were?
No, and you know what? It's the opposite. Like I talked about, that So we like to use the different moving averages to kind of tell us that story, right? We go really wide at first and see what that looks like, and they were the top at the 90-day moving average on a year-over-year basis. They're number one. But then when you zoom in and go 30-day, which is really like how you doing right now, because it's not going to be reflected in this quarter's earnings, but it will be talked about when it comes to guidance. And when we did that zoom in, that number went from plus 20 to plus 34 on a year-over-year basis. So that gives us a lot of confidence that not only are things going well, but they're actually accelerating to the upside. So yeah, I don't think that they're slowing down, and I know. Again, I agree with you 100%. You've got to have this continued growth. A lot of that growth is priced in. You know, they're gonna compete with Nike. They're gonna continue to grow and go from 2% to 4% to 6%. That's the story that investors want to hear. They don't want to hear slow growth. They want to hear, you know, very explosive growth. And from the data that we've got, we're seeing it happen. We're seeing them on track to continue with what they projected. In fact, they guided for plus 27%. I think that right now we're showing plus 34. I'm not saying they're going to beat by 7, but the trend is moving in that direction for them to actually outpace the guidance that they gave.
Yeah, the stock has bounced to 47% from those lows that we saw in early April. Landon, I got a question for you because I wear these sneakers, you know, now, and I used to wear the same kind of sneaker for 20 years for running, doing all that stuff. But now I switched to On the last couple of years. But one of the things that kind of is intriguing to me is the fact that it's not the younger generation or demographic that actually started wearing Ons. It's like people my age, maybe a little younger and a bunch older. When I travel, all I do is see people my age wearing these sneakers. Do you guys have any data that tracks that, like what demographics are buying these? Because I still think of the younger generation buying, you know, Nikes and Adidas.
Yeah, I think, you know what, I'm going to challenge you to look around next time, and when you see more young people, I want you to look at their feet more, because I think that you might have a selective bias here. I think it's all over. I think a lot of the demographics are doing. Also, you're not that old, Tom. Come on, you're young at heart anyway. But no, I actually think it's spread around pretty well. I would prefer if it hadn't caught on with one demographic or the other yet as an investor, but I don't think that's the case. I think it's doing pretty well, especially again among the performance type people. The runners definitely are on holdings. Now you're starting to see more on the tennis courts here and there, and I think that's the way that it creeps in, because if you start wearing them for comfort while you're running, you realize, well, I could wear these every day. I don't have to wear their running line. I can wear a different line, and they're still just as comfortable. So the data that we've got is pretty spread out among demographics. We don't have any concentration in one or the other. But yeah, I'm going to challenge you on that. I want you to, you know, just take note of the next, 20 or so young people. Check out their shoes and see what they're wearing. I bet you it's more than you think. But yeah, overall, just they seem to have very broad appeal, and the sentiment data that we pull on happiness, extremely high. I mean, the comfort and comfortability are scoring really, really high on these shoes. People, anytime they talk about them, that's one of the main things that they talk about. Now, you know, I can tell you, I think anecdotally, I think they wear out faster. I think that's a trade-off between getting super comfortable shoes and them lasting a long time. That's just kind of the way, you know, physics works. But that's fine for an investor, because that means you got to buy another pair, and every time you buy them, you're happy you're putting them on. So that's kind of what we're seeing right now. And again, the collaborations that they're doing, Zendaya, I think I'm saying that right, the actress, and then a Federer, that's bringing in a lot of the younger generation, now tennis players as well. So they know what they're doing on the marketing side. They're able to turn that brand recognition into dollars. Again, not just for the shoes, but they're starting to dip their toe into apparel. And if they can continue with the high quality that they're known for with shoes and continue that into the apparel line, I think that can grow very quickly as well.
Yep. And Landon, I am old. I just act like I'm 15, so that keeps me young a little bit. But I will watch that, especially overseas. I see a lot of people wearing them when I travel overseas. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us.